Welcome to the May 2026 edition of the GECF Monthly Gas Market Report. We would like to present a short overview of the main highlights of the report, which include the major developments in the gas market during the last month. In May 2026, Oxford Economics estimated the global GDP growth for 2026 based on purchasing power parity at 2.9%. This estimate was unchanged from the previous month, reflecting a stabilization in global economic conditions and a balance between cooling inflationary pressures and resilient consumer spending. Global economic activity is expected to recover in 2027, with GDP growth forecasted at 3.3%. US GDP growth estimates for 2026 increased to 2.2% on the back of investments in AI. In 2027, GDP growth is forecast to strengthen to 2.6%, anticipating a broad-based recovery in global trade and manufacturing. In the EU, 2026 GDP growth was estimated at 0.9%, suggesting a stagflationary shock, while 2027 growth is projected to rise to 1.5%. China's 2026 GDP growth estimate fell to 4.6%, and growth is expected to slow in 2027 to 4.1%. India's GDP growth for 2026 was estimated at 6.2%, with the outlook for 2027 rising to 6.8%. In the first quarter of 2026, aggregated gas consumption in some of the major gas-consuming countries, which account for 75% of global gas demand, decreased by 0.3% year-on-year to reach 949 BCM. In April 2026, EU natural gas consumption increased by 2.8% year-on-year, reaching 23 BCM. The increase in gas demand was primarily supported by higher heating requirements in the residential sector, driven by colder weather conditions across large parts of Europe. Electricity generation in the EU increased by 2.6% year-on-year, reaching 199 terawatt-hours. However, gas-fired power generation declined by 6% year-on-year, largely due to a substantial increase in wind, solar, and nuclear output, as well as higher gas prices resulting from the Middle East conflict, which displaced part of gas demand in the power sector. In March 2026, China's apparent gas demand, production plus LNG and pipeline gas imports, recorded a decline of 1.8% year-on-year to reach 34.7 BCM. For Q1 2026, Chinese gas consumption rose by 0.3% year-on-year to 107 BCM. China's electricity generation reached 855 terawatt-hours in March, a rise of 2.9% year-on-year. In April 2026, US gas consumption decreased by 1.6% year-on-year to 65.5 BCM, reflecting lower demand in the residential, commercial and industrial sectors. Residential and commercial gas use declined by 16% and 15.6% year-on-year, respectively. Industrial gas demand also slipped by 2% year-on-year, driven by softer manufacturing activity, indicating that economic fluctuations are increasingly influencing overall seasonal energy requirements. In March 2026, global gas production was estimated to have declined by 5.3% year-on-year to stand at 348 BCM. Global production was heavily impacted by the supply shock in the Middle East as a result of the ongoing geopolitical conflict and the closure of the Strait of Hormuz, with the region's supply declining by more than one-third on a year-on-year basis. This was mainly driven by the large decline in the region's main gas and LNG producers, with Qatar facing the largest reduction. On the other hand, the sustained increase in the North American gas production partially offset the impact of the Middle Eastern supply disruption on global gas supply. European gas production recorded a 3.1% year-on-year decline in gas production to 16 BCM. This decrease in the European output was mainly driven by lower gas production in Norway, the UK, and the Netherlands. However, the magnitude of the overall European production decline was limited by the higher supply from Denmark's gas production. In March 2026, China's gas production maintained its growing trend to reach 23.4 BCM, representing a 3.2% year-on-year increase, driven by the commissioning of new gas projects. Meanwhile, in April 2026, US total gas production continued its growth trend to record a rise of 2.8% year-on-year and stand at 93.1 BCM. This growth reflected the favorable market dynamics, driven by the robust Henry Hub gas prices, along with the increased feed gas directed to LNG exports terminals. In April 2026, the EU countries imported a combined 12.2 BCM of PNG, which was 5% lower month-on-month, but unchanged from 1 year ago. After 4 months of 2026, cumulative PNG imported by the EU rose by 2% year-on-year, reaching 49 BCM. Russian flows via the Turkstream pipeline were 7% higher compared to 1 year ago, and Algeria increased supply to both Spain and Italy. Moreover, net gas imports via the interconnectors from the UK to mainland Europe reached 0.9 BCM. In March 2026, China imported 5.8 BCM of PNG, a 9% month-on-month decline driven primarily by seasonality as the winter heating season concluded. After the first quarter of 2026, cumulative Chinese PNG imports reached 19 BCM, falling 1% year-on-year. LNG supply disruptions from Qatar and the UAE, following restrictions on transit through the Strait of Hormuz amid the Middle East conflict, weighed heavily on global LNG imports in April 2026. As a result, global LNG imports declined for the second consecutive month, falling by 10% year-on-year to 31.5 million tons. Asia accounted for most of the decline, with regional imports falling by 13% year-on-year to their lowest level since April 2020, led by weaker imports in China and South Korea. Europe's LNG imports declined more moderately, down 7.5% year-on-year, as the region was less exposed to disruptions in Qatari and Emirati LNG supplies. On the supply side, global LNG exports fell for the second consecutive month, declining by 4.7% year-on-year to 33.2 million tons, mainly due to weaker exports from Qatar and the UAE amid the Middle East conflict, partly offset by higher exports from Canada, Malaysia, Nigeria, and the US. In April 2026 there was a slow start to the net gas injection season as the EU countries, driven by the dual pressures of a negative winter-summer spread and a significant JKM-TTF price spread. The monthly average underground gas storage level in the EU rose to 31 BCM, which represents 30% of the region's capacity and stands at 13 BCM below the 5-year average. In Asia, the combined LNG stocks in Japan and South Korea were estimated at 7.3 BCM, which was 3.3 BCM below the 5-year average, due to ongoing LNG supply restriction from the Middle East. In the US, the monthly average storage level climbed to 57 BCM or 43% of capacity, which was 3 BCM above the 5-year average. Global spot gas and LNG prices generally softened month-on-month in April 2026, reversing part of the sharp increases recorded in March amid easing geopolitical tensions in the Middle East. European hub gas and global spot LNG prices declined amid expectations of a gradual resumption of LNG transit through the Strait of Hormuz, which reduced market volatility and geopolitical risk premiums. TTF prices fell by 13% month-on-month to $15.60 per million British thermal units, while Northeast Asia spot LNG prices declined by 20% to $16.70 per million British thermal units. In North America, Henry Hub gas prices also softened month-on-month to $2.77 per million British thermal units due to weaker heating demand and robust gas supply fundamentals. Thank you for watching this short video presentation on the May 2026 edition of the GECF Monthly Gas Market Report. We invite you to download the full report from our website at www.gecf.org, or you can scan the QR code.